Okay, this is number 2 in your practice problems, and it's not nearly as detailed as number 1. We just have to record 2 adjusting entries, right? So basically what we have to do, right, we had our setup where, we organized this company at the beginning of February, and then all these events occurred, all these transactions occurred over the course of February, and then what we have to do is to take into account using up some of the prepaid expenses. Okay, so this is where it starts getting a little wonky, right? So they're telling you, record the adjusting entries at the end of February to record the insurance expense and supplies expense. There was $150 of supplies on hand on February 28th. Identify the adjusting entry for insurance as A1 and supplies as A2. Right, so I've already pulled down insurance expense down here on this pull down menu, but they don't tell us how much it was. So let's use Excel to figure it out. So we'll say insurance expense, right? There's no cash involved, right? But we have this prepaid insurance for $1,700. And if we look up here in the transactions, what we see is that we paid $2,700 on February 1st for a 1-year policy. So what that means is every month we use up 1/12 of the insurance. Right, so let's divide that by 12. Divide the 2,700 by 12. And that'll give us our insurance expense for the month, which then comes over here and reduces our retained earnings. And actually, I need to take this as a negative, right? So we have to, again, take and, let's see, write down the prepaid insurance by 225. Write down the retained earnings by 225 also. Okay. So then we can go ahead and calculate our balances again. I'm just so lazy. There we go. Okay, so we could write all these in a cross. I'm not gonna make you watch me do data entry here. Okay, you just need to fill in all the balances as they show up over here in the spreadsheet. And then the next and last transaction that we need to, or adjustment that we need to make, is the $150 of supplies. And so that, again, is a little bit tricky, right? So we have a supplies expense. Now, the supplies expense is not $150 because we went and we counted up the supplies that were left, right? We started with 900. We ended with 125, so that means that we used 750. So we are going to reduce our supply asset by 750. And then we are also going to go ahead and enter this as a reduction in retained earnings because it's an expense. Right? And so our balances, we can go ahead and copy this and paste it just like we have been. Okay, I'm going to stop the recording for a minute and fill in all this stuff and then come back to you in a sec. Okay, so I just paused the recording and transferred all of my information from my spreadsheet over here to the Cengage data entry sheet. And so then we want to look at these lower sections. Now you'll notice, right, when you're making these adjustments, these are not cash transactions. Nothing's showing up down here on the statement of cash flows, nothing changed. But over here on the income statement side, we did have expenses that we recognized. Okay, we recognized insurance expense at 225 negative and supplies expense at 750. Okay, so then our net income remained positive. Okay, and it's going to be, right, 10,525 because our net income, remember our retained earnings, takes out the dividends, right? So if we want to know what this number adds up to without having to go over here and laboriously add everything back in, we can just sort of add $4,000 to it. So it's going to be 10,525. Okay. So let's check my work, just make sure everything's right. And it is. So there we go. So that's how you do number 2. Now I'm going to go straight on to number 3 because that also is fairly quick. Now number 3, I went ahead and closed out my Excel sheet because you can do this easily enough without Excel. And I want to note that what you have here is pretty much everything that you need, right? The balances, the ending balance at the end of the month in each of these accounts are what you're going to put in a balance sheet. All these items in the income statement are what show up in the income statement. All these items over here in the cash flow statement that you've been entering all along are what show up in the cash flow statement. And the only statement that isn't explicitly drawn out here in this little integrated framework is the statement of retained earnings. So let's go ahead and just construct our financial statements. When you're making income statements, when you're making financial statements, you always start with the income statement. So, and there's a certain order that items appear on an income statement. So I always suggest to my students that you start on the left-hand side and enter the numbers later, okay? Because once you have all your categories, then adding the numbers is trivial. Okay, so our fees earned is the top, right? That's our revenue. And then operating expenses include, let's see, wage expense. I can tell you that the word expense is a dead giveaway here, right? You just pick all these items: utilities expense and supplies expense, insurance expense, and miscellaneous expense. So here we are. So our fees earned were $28,500. Our wages were $10,800. Rent was $3,200. Utilities was $1,400. Supplies were $750. Insurance was $225. Miscellaneous was $1,600. Okay, and then you add all these up to get a total. So the total was $17,925 for the expenses. And then that means that we had a positive net income of $10,525. Right? So that's our income statement. Okay, it's given in a particular order. You wind up with a positive net income. Then we move on to the statement of stockholders' equity. Now remember, we began the business on February 1st. So let's just keep everything straight in our head by entering 0 here, okay? And then the first thing we did was we issued common stock, which gave us a balance in common stock of $15,000, right? And then the next thing was we had net income of $10,525. And then we issued dividends of $4,000, which means that at the end of the day, right, we've got a $15,000 balance in stock, a $65.25 balance in retained earnings, giving us a total stockholders' equity account of $21,525. Okay. So that's our statement of stockholders' equity. So the next thing we need to do is make a month-end balance sheet. Now let's just go ahead again and fill in the left-hand side here and then fill in the amounts. And this is going to be very easy, right? So the left-hand side is our assets would include cash and supplies and prepaid insurance. So those are our columns up here: cash, supplies, prepaid insurance. Okay. And our liabilities, we have an accounts payable, and then we have two categories of stockholders' equity. One of them is common stock, and one of them is retained earnings. So then we can just go up to the bottom of these columns here and take our month-end balances for all of these. So again, in the interest of time, I'm going to pause this recording for a sec while I do that data entry. Okay, so here again, we just picked up all these balances from the ending balances in each of these categories from above for the balance sheet. Now, one thing I want to note is a balance sheet will have subtotals, total assets, total equity, and total liabilities and equity, which you just have to calculate those subtotals. And then the last item, again, we're going to pick this straight up from above. Okay, so we've got our cash flows. As we were recording them, we recorded them in 3 different categories. Financing cash flows, which have to do with obtaining and paying back financing for your company, separate from the operations. Operating cash flows, so these are things involving revenues and expenses. And then we had another financing cash flow, which was involved in paying the dividends. Okay, so let's go down and pick those up. And what you see also, so here is our cash flow from operating activities. So we have cash received from customers, cash paid for expenses, and then we have a subtotal, which is net cash flows from operating activities. Our financing activities, again, you can see by the way these are set up that they've got subtotals here, and we use the word net to mean sort of at the end of the day. That's what net means in this context. Sometimes I've had students who have a hard time with that use of that word, right? So our cash flows from financing activities, we're looking for 2 financing activities as well as the subtotal. So let's grab, again, I always like to do the left-hand side before putting the numbers in. So we have, let's see, cash received from common stock, cash paid for dividends. Right, so here comes our net cash flows from financing activities. And then, right, we have change in cash during February. And then the next thing we want to see is our beginning cash balance and our ending cash balance. So that's how a cash flow statement is laid out, right? You add up all your cash flows. That tells you what the change was during the month. Then you look at what you started with, and that should give you your ending cash balance. And again, I'm going to pause this video for a minute while I do that data entry, and you'll see how this is all supposed to work. Here it all is, all beautiful and correct. Right, so you started with 0 cash, you add 19.8 to it, and you end with 19.8. And you can separate out your cash flows by operating cash flows and by financing cash flows. And then the third category of cash flows, which we don't see here, is investing cash flows, which have to do with purchasing long-term assets or retiring long-term assets. So that's how you get from the transactions to the income statement. And then I think I'm going to just let you go ahead and work this example out yourself in this sort of infinite check my work situation, because we went through some adjustments in the context of this large project here. I'm not feeling like you need an explicit example of how to do the adjustments in Cengage. So now you have everything you need to go ahead and do these quantitative homeworks. Okay, so take your time, do it right, and then you'll know where financial statements come from.